Hello you guys, welcome back to my channel. So in today's video, I'm going to talk to you guys about my highest probability confirmation. I'm super excited to share this with you guys. It's really amazing when you add it in with all your other confirmations. At Smart Money Academy, we have like 15 confirmations and we only trade 90%. So if we don't have 13 confirmations out of 15, then we don't take the trade. So this is one of the really high probable confirmations, as well as different confirmations to me way differently when it comes to, obviously having a high probable setup. So first, I'm going to show you guys this trade that I took on GBP CAD. So first, I'm just going to mark it up. I deleted everything. This is my trade. So we have a previous point of interest. Now, I'll throw it to the 5 minute for you guys. On the 5 minute, you guys can clearly see this unhealthy price action. Okay, so here we filled here, okay, this unhealthy price action. So if you're a beginner, this may be a normal trade, but I'm going to show you guys how this is actually a schematic. So step one is having that previous point of interest, which I teach in my academy. Okay, and then in this area, we're actually waiting for a schematic to build. So that's where, I teach you guys how to wait in the right area for schematics to occur. So I'm going to start breaking this down to you guys as a schematic first. I have this weird glitch on my trading view, you guys. If you guys know how it happened, my trading view went down last week, and now let's see if it happens. Every single time I click a text box, it says look first then leap. This is not my confirmation. I don't know how to fix it. Maybe I should log out, log in. I'm like, did I accidentally add a indicator? So this look first then leap thing is literally a glitch that I've been having for a week. Maybe I'll log out, but maybe I'll message TradingView, but completely ignore it. It's so random. I've been trading for how long? I've never had a glitch with TradingView in my life. So every time I click a text, it says this, but I just write over it. So really, we're looking for UTAD. I like to do everything in caps. So UTAD, right? This is a distro because we went in, and this is our highest point. So we're just going to go down the three highest points. So UTAD, BC, UTAD, UT, then BC. And then that's going to make this right here an AR. Now, at first, I was like, okay, well, this would be the AR, this would be the MSAL, right? So I'm going to move this down here because if this is the AR, then this is an MSAL. This is the second test, then MSAL, and a huge sign of weakness. So sometimes you have to play around, right? And if we look at it from this way, even though we mark it right to left, if we look at it this way, the buying climax is here before we get the retracement. Okay, so this is a buying climax, and we'll just make this a second test. Okay, and then go through the schematic. This is a second test. This is a minor sign of weakness. Okay, below the second test as well. In my academy, I teach you the difference between minor signs of weakness and second test. So if you're just labeling everything second test or SALs, well, you may not get the schematic. So this actually is a migration block, so where price kind of stutters a little bit. And then we have another test of the area before we go down. Okay. And this right here is our actual sign of weakness. Now, please notice the AR and your BC is a trading range. I'm not using the BC as trading range, okay? And we're using the wick in this example. And notice that we have unhealthy price action. I'm actually gonna go to a lower time frame because it shows more clearly. I'll show you all the time frames. So we have this unhealthy price action that we're actually looking to enter. Okay, so this is when we get our sign of weakness that goes below this wick, okay? Goes down. So this is where I realized we have unhealthy price action. I actually took this trade last week, and I can either start it here, my imbalance, or I can start it lower. Okay, so it can be tricky in the lower time frames. So I don't recommend starting here, but this is how I trade. So it's what I show you guys sometimes. So I was looking for a PY. So let me go down to the 2 minute. Okay, and then we have price go up here. And this price stays the same. Okay, the area stays the same. So let's go down to the 1 minute. And this stays the same, and this moves again. So you want to work with the places. I'm not sure if we did the 5. No. We didn't do the 5, and it's up here. So you want to work with the price action number 1 that stays in the same area. Even though sometimes we do the highest imbalance, but this is the one that actually has trading range alignment, you guys. So, and you see here, it's very more clear that this is the BC and AR now. So switching time frames is important. Too many times people get on the charts, look at one time frame and make a life-changing decision off of that. Okay, so that's the 3 minute, 2 minute, 1 minute. So as I'm changing, you guys should be looking here and looking how this stays the same. So let's just do it again. Look here, because we're looking here. 5, 4, 3, 2, and 1. Okay, so let's go to the 3. Okay, so we have the clearest gap. So, oh, guys, like so much glitching. I don't know if you guys seen that or if I'm going to keep it in. Okay, so I'm going to go with the bottom one, which is what I did. It's very close to the trading range. As you guys see, it's trading range alignment. Trading range and entry is the same. So in this situation, it's a little bit lower by 1 pip. Now, if you have it all the way down here, you guys, or down here and you're looking, this is trading range alignment, it's not trading range alignment. It needs to be 1 pip or less off. Okay, so especially on lower time frame, it's going to be like 1 or 2, not even 2 pips, like 1 pip off in terms of actually being aligned. Like this entry and this is not trading range alignment. It's actually off by 1 pip. Like, actually, it's a pipette. If you look at the right, it's 34 and 33. Actually, 32. So 2 pipettes. So it's not a pip off by 1 pip. It's off by 2 pipettes. Now, if I check my broker on my MT4, it's probably the same. And that's where we're actually going to set the trade. Okay, so don't have a 3 pip difference to say, oh, I have trading range alignment. I have trading range alignment. I have trading range alignment. No. It has to be less than 1 pip. And that's my confirmation. So, oops. So I'm actually going to respect the lower imbalance instead of trading range alignment is the entry. Because if I put it at the trading range alignment and it only goes as far as the imbalance, then I won't get into the trade. So you guys see, this is a 3 pip stop loss, as you guys know. So I'll show you guys at a 2.5. I do use 3 pips as my minimum. That's why, so I don't have to worry about spread. And then I'll just take this down to these equal bodies. I trade over 8.5 and play it out for you guys. Okay, you see how sniper entry, sniper exit. Now, normally I would have like normal time frame, your stop loss would be here and you would have been out here. And when I say normal time frame, it's because on a normal time frame, this would be like a 10 pip stop loss, 100 pips, you know what I mean? But on a lower time frame, you have to be careful because it can ruin your risk to reward because you have to stretch for extra pippage because we have a minimum because you can't have a 1 pip stop loss, okay? So again, I teach all about lower time frame, 1 pip, no, sorry, not 1 pip stop loss, 3 pip stop loss, sniper entries, trading range alignment, previous point of interest, schematics, everything in my academy. So if you're interested, the link is in the bio. Thank you so much for watching. Don't forget to comment, like, and subscribe. I'll see you guys in the next video.